Hey everybody, it is Friday the 21st of December 2018, and what can you say? Wow, what a drubbing the market got this week. S&P 500 7.5%, Nasdaq 8%, 11% for the biotechs, etc. There wasn't really any equity group that went unescaped. Let's take a look at the charts here. We're looking at a weekly chart, meaning each one of these candles represents 1 week of trading, and you can see here this week that is just a huge red down week as we broke a major level of support. As we know, the volume weighted average price from the March 17 high had been holding as support, and we broke that this week, or I'm sorry, last week, and then we went right through the volume weighted average price from the election, the volume weighted average price from the 2016 mid-year low, and now here we are in the volume weighted average price from the low of 2016. This is a perfect example of why we call these levels potential support. Like to call them a level of interest. So what we want to do, as I always say, is when we come down to one of these levels of interest, such as this volume weighted average price, we look for shorter term time frames to confirm, or look for evidence that there is buyers gaining control. And at 250, there was no such evidence, and that's the level that I just had circled or arrowed right there. So the fact is, we're still below this declining 5-day moving average. Obviously, we're oversold. We've been oversold, and maybe we continue to get oversold. It sure seems like it's due for a bounce, but there is absolutely zero evidence that buyers are stepping in. In fact, just the opposite. If we look at the 2-minute time frame, and I'm going to show you why we're looking at such a short-term time frame here, the volume weighted average price from an event is what we want to look at. Well, what was this event on Wednesday afternoon? That's when the Federal Reserve opened their mouth, and from there we've seen this market sell off. We came right up to it this morning. I pointed that out on Twitter that we were right up against it. I said as we were approaching it, and then it came away from that level, meaning that since that event, for some reason, there are sellers, who continue to accelerate their activities in this market. So let's go back to the weekly time frame. We do have a longer term trend line that goes back to 2008. In fact, we have to look at a monthly chart for that to really make sense. Now, I don't think that it's likely we'll go down to that level, not on this leg lower, but it certainly is possible. It's done more to the downside than I've expected, but the fact is we're still in a downward trend. There's really no evidence of a reason to be a buyer here, even on the very short-term time frame. So it seems like it's down too much, but if there's still sellers out there, there's no such thing. We spoke about the measured move from point A to point B, led us to point C down in towards 248, I think, yesterday. Well, we severely undercut that level as well. Fear knows no support, is what people say, and here's why that phrase has validity. The Nasdaq lost a huge amount as well. We are now right down to the volume weighted average price from the 2016 low. We undercut the election VWAP this week as well as from this low, and now again, this is, I think, an important level. It's a level of interest. It's where we want to look for potential evidence that the buyers are gaining control. But again, we look to a 15-minute time frame and we see that declining 5-day moving average. There's no evidence at all. If you want to be, if you want to buy because you just think it's good to stick a bid in at a certain point and deal with the the possibility of further downside, that's a different strategy than waiting for technical evidence. And that's a strategy that so far has not worked this year, trying to buy dips. We wait till after a dip, in this case a smashing has occurred, and we wait for evidence that the buyers are stepping in, providing support, and just closing on this level doesn't mean there's support there. This market might go down right through that next week. If we take a look at the Fibonacci off of the 2016 lows to this recent high, we see we're not even to a 50% retracement. Same thing is true, of course, for the S&P 500, taking that low from 2016 up to this high. We saw that the volume weighted average price from the mid-June low tied that 38.2% retracement. I thought it was going to be a level of support, but I didn't take action because there was no evidence in there right in this point. We were below the volume weighted average price from the Federal Reserve, and you think you're going to want to pay attention to that next week in all of these markets. You look at the Nasdaq with the VWAP from the Fed, this week. It came up to it 2 times, and like an electric fence, just jumped right off of it. The Russell 2000, we can take a look at the volume weighted average price from the I think I said election, I meant Fed, from the Fed on Wednesday, and we came right up to it, and then sellers stepped back into this market once again. We're below all those VWAPs, obviously. We're below all these moving averages. In fact, if you look at the volume weighted average prices we've sliced through the 2016 low. That's way up here. I mean, that's at 138. Here we are at 128. There was no support. Then we slice through next the volume weighted average price from the 2015 high, and now we're even below the low from 2014, which is crazy, because what that means is the average participant since this point in time right here is losing money in the Russell 2000. The volume weighted average price, if you're a cost, thinking about the cost basis, then they are on average losing money. And certainly it seems like it's overdone to the downside, but when you look at the evidence, there are still sellers in this market as we went out right on the lows. Next week, it'll be important for all of these markets to first get above these volume weighted average price levels from the Federal Reserve meeting. And, semiconductors, more bad news here. We broke below on Wednesday. We broke below this prior level of support. The evidence was telling us that that was likely. We had the failed move above the declining 50-day moving average. We broke this little trend line and this support, and it was lights out for the semiconductors as well. And where we are right now is we're below the volume weighted average price from this low right here in 2015. Are we below the high from that? We're right on the volume weighted average price from the high of 2015, and if that fails, the next level to be tested will be down here near $80 per share, which is the VWAP off of the late 2014 lows. It remains a disaster. You can't fall for these rallies, and when we have declining 5-day moving average and lower highs and lower lows, it tells you stand on the sidelines or be on the short side. For me, once the market starts really accelerating to the downside like this, it's difficult for me to get short. So I'd rather step aside, and because I just don't have confidence that it's going to do an unusual move the way it has here. This is not normal, this type of selling, but as I like to repeat, I don't know whose phrase it is, you're better off on the sidelines in cash than you are being in the markets and wishing that you were in cash. Let's look at the biotechs on a weekly time frame. They broke that level and that trend line, and it's just been, as we said, for these other markets, lights out in here. Just terrible selling all across the board. Financials continue to get hammered. They're now below the volume weighted average price from the 2015 low. We've got the trend line from the 2008, 2011, and 2016. That's way down here. A lot of people are saying it's because of Goldman Sachs. If you look at Goldman Sachs, it's certainly gotten crushed. It's exceeded the height of this pattern for the head and shoulders, and looking over there, the volume weighted average price from the '08 low, we might still see this stock come back down to 150. So looking at financials, it's still a seller's market, and there is no evidence that there's a reason to go in there and buy. Now, like they say, when when it's time to buy, you won't want to, and maybe that's where this level is. But don't feel badly if you miss, part of a move. You can always get in after it's already, even if it's gone up to the 5-day moving average, pulls back, finds support at the VWAP from the election, and then this might be Tuesday into Wednesday of next week. Tuesday it's closed, actually. Wednesday is a half day, so I think a lot of people are just getting rid of their stocks before their holiday and that sort of thing, which is a terrible reason to sell. But the energy names, those guys continue to get smashed as well. Look at this on a weekly time frame. Just a complete breakdown. And when these markets do get their bounce and rally back up, look at these prior bigger levels of support. They are likely to become resistance. Let's take a look at Apple real quickly, because I know a lot of people like to look at Apple. The volume weighted average price from the 2016 low, let's color code that so we can make sense of it. You can see we're below that right now. That was a potential level of support, but right now there is zero evidence of that. As far as a retracement goes, we've retraced. I mean, maybe we're going to come down to a 61.8% retracement, which would be just a massive pullback down to 145 or so. But that's, and below that, we've got the volume weighted average price from this peak right here and from this low. So those two come together even, below that 145 level. So it's just not safe to go in yet. As the evidence shows us a different story, then we will take a look at it and look for the low risk, high probability trades. I wanted to mention real quick, I can't believe I left it for the end. My friend JC Peretz and I are hosting Chart Summit 2018. And what that is we are going to Breckenridge, Colorado, February 22nd and 23rd, and we're going to do conferences from 3 to 7 p.m. Here are some of our speakers, myself and JC. You probably know John Nigerian from CNBC, Todd Gordon from CNBC, Sean McLaughlin, great options guy, and another technical analyst, Tom Bruni. Go to alphatrends.net over the weekend and take a look at that, or just go to chartsummit.com for any questions about that. Hope you made it through this week, and have a good weekend.